here the disclaimer is over. So let's proceed. So, folks, I think last week you have seen we had a great week. Those who is active in the market, you have seen that. So this chart, what they're telling you that S&P versus 10 years, the treasury yield on the blue one, where you are looking at since 2000. June 2023 this year, every week by week, you are looking at S&P. We saw that it spiked at some point, and in August, right before in our top, and then since then it came down. Last 2 months, we saw that how S&P was dragging, and then this week it was a great fast week in November. We did say that historically, those 2 months, September, October is the bad months, and then November, December also that we leaned towards that. Historical data tells us it's positive. So and then good trend. Okay, and here you are looking at that 10 years. The treasury yield almost touched 5% in October, but now slowly coming down. So overall, it's a good sign for market. Hence, you saw that this the week market was on fireworks. Next chart, what you're looking at, where financial condition credit index, which is almost like for business, what it takes for business to take the loan for to grow their business. That's blue one, and the same one 10-year treasury yield. You see that from top side, but last 2 months you see that that taking the loan is what also that they ease up that loan piece a little bit. With that, you see here happen end of September, the whole market was under pressure. What will Fed do? What will they do? As you know, the Powell and all the others gave an indication they might have increased the rate. How many times we did not know, and also like they have not talked about what will do with the rate, rate cut and so on. But overall, the market liked what Powell mentioned last week. They are seeing a good trend, good economic growth, which this is exactly what I was showing you guys earlier, that economic growth looks good over for the country. GDP is also growing higher. Hence, we might see, based on what Fed make the decision, market might bounce back or see the good response, and that's exactly happening. Okay. And you see that this is one of the indicator you need to start looking at, that the labor market, that's the blue one, is going to give you indication if growth side that business are having a hard time to get enough loan, and that's financial condition credit index. That means the labor market is going to slowly slowing down, which next year going to see a chart. I have a whole chart about that. Any questions so far what I shared the last two chart, where 10 years yield, treasury yield, and then you have a financial condition credit index. Good. So what you are looking at here, stock and bond market return during this whole Fed rate pause. Whenever they cut the rate and Fed stay aside, they don't come and jump in. What really happens in the market? If you look at it since 1992, 94, if Fed stay on the side, they don't just go interfere and touching the rate, and then look at which one, 2008 and 2015, around that time, how fast that stock market return was growth, 163%. We know that after the financial recession, 2007, 2008, the new administration came, long time there was no discussion about rate increase and that. But that time, if you'd been investing in the bond market versus equity market, your growth would be that high. That's the indication it's telling you. On 2020, and then since 2022, that Fed came along and started looking. When it came and started looking, increasing the rate happened. They started doing it after March. So you are going to see the different picture later on, but this kind of gives you an idea when it's Fed is pause their increase and they stay on the sideline, let the market do whatever market is doing. Investor gain their confidence back in the market, not like every time Powell or any kind of Fed reserve says something and market becomes more volatile. That's the indication from here. All right. This is the one I was leaning towards earlier, what I shared about the market and the job market. If you look at it, that labor market and the job gains, labor force participation rate, monthly job gains and participation rate, but it slowed down in September. That you see that a monthly job gain is really good number, but October number was not that good. But there were other aspect was really good, hence market just did very well, although with this small bad news, hey, job slowdown. We know month of December, January, uh, and February that in certain type of job is not going to be there, and if not, and market is ready as long as other people have the job and we have seen that consumer CPI consumer has good amount of cash at their hand and they are spending money, so economy is celebrating. Okay, that's comes to core CPI and wage growth. What I was mentioned. If you're looking at look at week by week, October 14, October 16, each week we saw week by week that core CPI and wage growth is a slowdown week, and then core CPI as well, which the for some certain things where you buy your food, grocery, those price also came down along with it. So when that is, it's a good sign that people are not spending too much to take care of their main basic needs. Okay. Am I going too fast?
A little fast.
Okay.
You got to run up your 30 minutes. You got to stretch it.
All of you guys are now so quiet, just like I'm in school, the teacher, and I'm giving a lecture, and you guys say, "Yeah, when is it going to be done? When is it going to be done?" So yeah, chime in if you have any questions. Stock market return for November, December. This one is showing you since 1980 to 2022. You see overall that those 2 months, you remember the last week I shared gain those October or September, October was negative, but we saw that December, January was really good positive. And here also showing, an average is 3.5% gain on using that S&P 500 index. Okay, so which is good sign, but doesn't mean that it's all going to happen. But at least it's a good start so far what we have seen. This one is what next chart. What is saying the market pullback and come if now Fed stays on the side and then don't.
Brendan has something he was going to ask you.
Sure.
Oh, Ron, I said it's too late. Okay, so on the last slide, the rally we've had in the last 5 days is like 5% or 6%. And the average for the whole November, December 2 months is 3.5. So you think we pulled that forward a bit?
Like we're done.
Yeah, wait, that's why. Wait.
Yeah, that was too fast, too big.
Too fast, right? Yeah, I have something else to add. On this one, it's a good question. That's why currently you cannot, if you see that certain position, I'm not sure what you are holding long term or short term. Certain asset is still is low. Certain asset it went all of a sudden too fast. Like, those who is following Tesla is flying on last week, Thursday, after Thursday, Friday, boom, it went up. Tesla, Nvidia, a bunch of those top Nasdaq gainer is really did well. That when it's pull back, you'll see that the which are what we covered earlier. That look at a value investing, it didn't go much further. So I would keep an eye on this. If you see have certain gain, if it's not a long term, then you are not worried. But look at areas that it did not grow far, grow much, and take advantage of it. Okay. So what goes? We know that it's the past week. It happened in the past. For fake. Going up, and then something bad news happen, go down, and but I do feel like in a week it went too fast. It needs to cool down a little bit, or it has to prove that it can stay above wherever right now on S&P. If you look at it index wise, 4200, the SPX
Yeah, short term, you might be a
4243.
little bought and it has to consolidate a little bit, right?
Yeah,
There'll be some more overbuying and then it will
yep.
revert.
There are people who is short term one is take a profit if you see the profit. If not, that you'll see it. But long term, still there are plenty of opportunity that you are going to see. All right. So nobody knows. Nobody knows. All your portfolio green long term. You are not worried. You just keep adding those assets that what you still feel like that it has a good return.
Anybody who claims they know what's going to happen next, they're smoking something.
Yep. Right. So know that 3.5% is not bad if you will those long term. And especially Jeff is in the room, people like Jeff will say, yeah, I'll take that any days as long as it's growing and not going down, right? So here, what you are looking at when Fed pullback, market went down, we saw that from since July at the bottom, look at July 2023 till September, the October, that market pullback, that S&P 10% down. So earlier, historically, I showed you last time with the chart that you see that when it pullbacks following 2 months, usually it goes up. So it's a good sign, but in 3 days it cannot tell anything. It has to consolidate, just like Ron and mentioned. Okay.
Yeah.
This what you're looking at, I guess last week you see the last week index 6% Nasdaq in a week. It's a huge huge gain for Nasdaq. It's back to, you saw last week it was around 20%, now 28% on Nasdaq year to date. It's a huge gain. And we saw last week that S&P Dow was negative. Year to date was negative, but now both of them came back to positive in a week, in 3 days. So it needs to consolidate. All right. So next week, what's gonna happen? Like you heard from Ron, nobody knows. If somebody says I know and all this happened, it's just, by now you guys are experienced enough to understand. Your portfolio can tell you. If you see the green short term, take it. Don't get greedy. I'm sure that many times others are saying stay disciplined. But as far as earnings, there is still a lot of earnings going to come in. But one thing you are going to see that as earnings are coming in Monday, Tuesday, a lot of retails and Roblox, all the games, AMC, Disney is very interesting to see what Disney has to do. We knew that Disney was losing money like crazy earlier. Tulio is technology side. I don't play any earnings. But this, whatever you play, just keep an eye on this, and if you see an opportunity, this is the time. I wanted to grab the Apple. I'm hoping Apple is going to be dipping more, more. It didn't. I had a number below 170. Apple goes, but I'll keep an eye, on market pullbacks.
That's a reasonable price target, 170.
Yep, 170 my target. Apple goes 170 below. It's a very good company to get into it. Yeah, those who's looking long term, short term, long term, awesome company. You don't have to be losing your sleep over those type of investment.
I've sold some
guess it gets
140s.
I would guess it gets to 160 again because they just guided during the call for another year of no revenue growth.
Right.
So,
That's something nobody wants to hear.
Yes,
yeah, but any dip is a buying opportunity long term. I agree. So
yes. Any
Ah.
deep Apple like 170, I'm going to add, it started adding anything goes below 170, slowly keep adding. Adding companies like these. That way you do not have to worry about no matter how bad things can go, the Apple will turn around. It will be golden.
That's it for this episode, folks. Thank you for listening. And if it was helpful to you, please click the like button and follow us so that you can listen to more of our podcast. You can also visit us at urbanhood.org to learn more about our other programs. We hope you'll check in with us again. And until then, keep learning and do whatever it takes to reach financial freedom and follow your dreams.